Welcome back to another vlog, people. I'm in this trade. There's the entry and all that jazz. Anyway, so it's a good one to talk about positioning. It's something I've been talking about quite a bit lately, and it's something that may benefit you, may not. But what I think is really important here, right, is one, the position of the trade, but two, what you're taking out, targeting, etc., etc. So this is a basic, 3R risk reward, which again, fixed R, there's nothing wrong with. We like it because there's less decisions to be made. But what you got to remember, right, is this is last week's high. Now, for me and my system, when a weekly high goes, weekly low goes, daily highs, daily lows, monthly high, monthly lows, you often get a form of reaction, which sometimes might be the positioning of this trade just doesn't have the minerals to do 3R, which would be like 14 pips above this high. So when it gets to these regions, you need to monitor it. You need to see it as a zone of reaction point, or where you might be met with sellers, and you need to make a decision of, if it does get there, which at the moment doesn't look like it's going to get anywhere, it's quite a pretty drawing, hey? If it does get there, what do I do when it's there? Because time and time again, I've seen this where that'll get taken out. You want 3R, which is your like defined fixed TP, but based on the position of this trade, it hasn't got 3R in it. It'll pull back deeper, and then maybe next week, or maybe later in the week, it'll go and hit that. So I think some things to look at when you're looking at your trades and your better quality trades is, what do they have in common? And also these key levels or key zones, if you think, well, what happens when this goes? You don't want to sit here. If you think this is a level that could be a reaction point, it doesn't have to be the weekly high, right? It could be anything that you think. Now, it's important. It's not just an emotional decision, and it's actually a decision backed by data or something, right? Of course, substance is important. But if that's to get taken out, you watch it go, and then you go, but I want to be right, so I want my 3R, and I'm going to let all this profit either turn around and BE me or take a loss. For me, that is mental, especially on prop, because prop's job is purely to get paid. Go again, go again, go again. You don't need to make stupid money on prop firms to do well. And you should always be looking at building a personal and obviously investing in other things, right? Hopefully that might give someone some help in some way, shape or form with trading. If there's nothing there, then that could argue, right, okay, positioning wise, there might be something further to the left that I want to look at. Now, there's always going to be something to the left. There's always going to be something. It could always come lower. Also, stop placement here is important. I could have got a smaller stop, but in doing so, I knew that there was areas below that could be mitigated, so I thought I'll give it a bit of breathing room. But in having a smaller stop, the TP is now further if I do fixed R. I think these are all sorts of like nuances that are not often spoken about in trading. It's like fixed R this, or you must hold to this, or you must hold to that. But as a trader, the more you do on the chart, the more you develop the skill, and the more you look at charts, the more you internalize. I've seen this loads of times. When this happens, this may happen. I need to make a decision. The difference is finding the fine line between emotional decision and logical. And that's the skill, and that's the skill you build over repetition and repetition. You've got to remember each trade is situational, and I think that's where sometimes the flaw can be is, for example, let's say you do 5R only. Is it a 5R trade though? Are you positioned for a 5R trade? Or actually are you positioned for a 2, but your inability to notice that and take that is the fine line between making money and not making money. So I thought I'd share. I'm going to make some lunch. Pick this up in a bit. Oh, we look like we've got new sauce on Edgewonk. Let's go. When I first spoke to the guys of Edgewonk, I actually what are you crying for, bruv? You excited or what? Man's gassed about it too. When I first spoke to them, I said it'd be really sick to implement this. I've been working behind the scenes on it. And I think this is version 1. So obviously it's got room for growth. But it's given me 8 outliers in my performance. So basically these are like new automated ways where once you click on them, it's going to give you a load of data. So I'm going to dive into this now. I'm going to give them some feedback on it. They've asked for my feedback. If you've got Edgewonk, check this out in your portal as well and see what you think, and let me know, because this is what I love about working with companies that I work with. They're so willing to take on advice and just make a better product, and I think that is massive, especially for us traders. Like, it can only get better. It can only help us improve. So again, if you're not on it, ALB20, save yourself 20% on the yearly subscription, which is, again, absolute gas, and get stuck in, because these are the sort of things that when you're really like deep diving on this sort of stuff, it can completely transform your performance. Well, EU said no bueno, so we're starting the week with a -1. And you know what? It's absolutely fine. Man, I've just realised how dark it is in here, mate. It's been a really dark and gloomy day today in the UK, Wet, and man, I went out this morning for a dog walk, got soaked, went out for my other walk, got soaked. But I had a choice to do it, and I wanted to do it. And also, your word is everything, and I get to do it. So what more could you want? Lovely little trade. I'd take that trade again. There's nothing for me to look at and go, oh, I coulda, shoulda, woulda. Again, just move. Honestly, between now and Christmas, just take your L, take your win, and just move on. Boom, boom, boom. Don't sit there going, oh, Should have been short, you know. Yeah, should have been short. You go on internet now, you see someone sold telling you they got this thing because of the moon and the stars aligned with the quantum physics of the daily open and the weekly and the monthly gap and this fucking... Doesn't matter. Like, just move on. When you can do that and you can have no attachment and you're detached, I promise you'll, one, either just make loads of money, or two, you'll learn some really valuable lessons in where you need to improve, and you'll know if you have or haven't got an edge. Too many people spend years going around thinking they've got an edge when they haven't. There's plenty of ways to trade. There's no right or wrong way. Everybody tries to predict, I've got the best way, this perfect system, whatever. The reality of it is whatever you do, if it works, it works. That's what matters. Doesn't matter how glamorous it is, how sexy it is, does it make money, is it consistent, is it sustainable, is it scalable? That's what matters. We're in a DAX long. Why is the camera looking like that? Yeah, it's actually a couple of days later now. I've just been really busy this week. Performance gap. I thought I would do it on here because I'll be able to just draw and do a madness. And I want to do it in live time because I think doing it like this and creating it and just dropping gems, this is where I fucking vibe, mate. This is the sort of stuff I do in Discord and it's just unreal. So this is our performance gap graph chart, whatever you want to call it, right? Now, what's really important, yeah, is you're going to have, and this is something you have to track, and I say this all the time, is... track must, and this is again where Edgewonk's great, and I will show you on Edgewonk, it tracks this for you, actual performance and, perfect performance, right? And the reason you need to track these, and this is why it's so important, and this is one of the first things I do when I work with people, is I want to know what should your edge be up, and what are you up? Because first of all, if your edge is up, we're going to do some drawing. If your edge should be up, let's call it here 75%, right? And then if we change the color, but you're up like here, let's call it, I don't know, 10 and a bit percent. Between here and here is your gap, right? And the reason this goes over people's heads is because they're like, well, what do you mean by that? What do you mean by that? Tracking this data is going to show you whether it's a you problem or an edge problem. Because in theory, if your edge should be up here, and let's say that's 75% return, right? And we're just basing this on 1% risk and stuff, right? Let's not get all freaking fancy pants with it. But you're actually only up 10%. Now, what we've got to understand is between and in this gap, a lot happens, right? So let's just say this is you following your rules, your edge, you've tested a system, you've got your data, and it's up 75%, right? This is its pico, this is its high. You're down here though. Why? Well, you've probably gotten in the way. And in between this area, let's change that color. Let's change it to green. Right, in between this area, you've done a lot of shit. And what you've done is, you have closed trades early, gone BE too soon, missed the trade, have hesitated. What went on? Bruv, hesitated. There you go. You've hesitated. You've FOMO'd. You've had greed. You've over-risked. You've missed sequence. These are all an accumulation of, why isn't that? Oh, there you go. So there's so much more, right? There's so many things you might have done. You might have, traded a new edge, tweaked your rules, followed a fuckwit online, intentionally made yourself busy, lack of emotional control, scared. Good spelling, man. Oh my God. Scared. Like, you get the gist, yeah? These, and there'll be so many more. But all of these constitute to this gap. And all you're doing is robbing yourself of what you could do. And what happens is, if you don't track your perfect performance and you only track your actual, what this does is this makes a lot of people change this color. Let's give an orange on the go. Got to be a bit of artsy crafty. What this does is a lot of people go, my edge is washed, need a new edge, it's not me, it's the market. And what they do, right, is they just go and look for something new. And they go and think that by finding a new technical skill or by finding a new thing on the chart, it's going to all of a sudden fix all of this. But the majority of this is your mind. And if you don't fix that, you don't understand that, it don't matter what system you get, because all systems lose. And it's about becoming a good loser and seeing winning and losing as the same thing. Because they are, it's just the belief you have upon winning and losing is skewed. And at some point, if you go back through time, and we can all do this with journaling, which is why I'm such an advocate for journaling, if you just set aside some time and went, right, where did the belief on losing come from? And you really sat, you've got to get in a good headspace. There's no point doing this if you're erratic, pissed off, and don't believe in it. Go back and go, right, who put in my head that losing's bad? And you might go back and back and back and back and go, oh yeah, it was John when he said this and he did that. All right, it was my dad, or it was my mum, or it was my auntie, or it was my cousin, or it was my mate. And you'll start to go, well, I have the choice to create a new belief. Because remember, the subconscious mind only deems to be true what you tell it to be true. It doesn't know the difference between reality and fantasy, essentially, right? You can make things up and it can believe it, which is why sometimes when people hear things, fear-mongering and stuff, they go, what, really? Is that true? Oh my God. And it might be because the person of status or power that you deem to be in status and power has said the thing, right? Go back and find out who said it, where it come from, and go, what if they're wrong? Challenge it and be like, actually, losing isn't bad. Losing is a part of what I've chosen to do. In any walk of life, you're going to lose, especially in investing and trading. But I promise, if you can detach from winning and losing and just see it as the same thing, you'll be sound. And what our job to do, and this is where you've got to remember, right? And this is really important, this one, because a lot of people fall into this trap. Let's change the colour to blue. And then delete that. Oh no, hang on. Right. It's mugging me off now. I'm not having it. Right. What a lot of people do, yeah, is this catches... Oh, for God's sake, blue. Right. This catches them out in the word perfect. That's a sick arrow, mate. What are you saying about my arrow? What a lot of people don't realise, right, is perfect is your mind's way, especially your ego and the old you, the old frequency, of setting you up for failure. Because it knows to be perfect is very unlikely. No one's perfect. There is always going to be a form of gap. It might look like this, right? That's fine still. You're still sitting above maybe 50%, right? That's still a very good place to be in a yearly return, especially if you've got good capital. You don't have to be sat at that. Your job is to close this gap as much as possible, right? Because you'll then get as close to possible with your returns, which is why I say backtesting is very flawed, because backtesting will say 75%, everything's perfect, rah, rah, rah. Life's going to life, shit's going to happen, things are going to happen. And it's really important that you take that in and you factor that in. But perfection is, in my eyes, one of the worst things that people fall into as a trader, because they think everything should be tick, 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 tick. And if it's not, oh, I'm not perfect. They go down a rabbit hole of trying to find perfection. They open up a new loop. They do the same shit on repeat, which is absolutely fucking mental, by the way. And they don't get anywhere. You have to accept you won't be perfect. You will make errors. But your job is to make as less of errors as possible, especially the ones that you can control. The ones you can control is closing a trade early, is going to BE too soon because you're scared. Like, BE serves its place, but going there too soon to just because you're scared, I would argue you haven't accepted the risk that you can lose. Because before you take a trade, you should accept, I can lose on this. Am I okay with that? Just like investing in a stock, a share, a crypto coin, you have to go, yes, it could do 1,000 ROI, some of these crazy coins, but it also could fucking die. Do I accept that? Am I okay to lose that? If not, don't invest it, which is why they always say only invest what you're willing to lose, right? Miss the trade. You could control a lot of that, but for example, last week I'm on school run, I'm driving, I missed a trade. It is what it is, cool. And I accept that. Hesitation, you control that. FOMO, you control that. Greed, you control that. Over-risking, you control that. Missing a sequence of events, you control that. Trading a new edge, trading a new pair, tweaking your rules, following a fuckwit online. By the way, you control that. Intentionally made yourself busy, you control that. Lack of emotional control and understanding, you control that. Scared, you control that. So what you do is go, well, actually, barring like maybe missing the trade because I'm doing something in my life, work, commuting, kids, dog, whatever's going on that's generally important. And don't get that confused for the intentionally making yourself busy, by the way, because a lot of people do that on purpose. I was busy, I went and fed the pigeon. What, bro? Like, what you on about? You'll start to realise that actually this gap can go from here to here pretty quickly without the need for new technicals, without the need for new source, with just you being competent enough to acknowledge and be aware, oh, hang on, this is old me, this isn't new me, this isn't going to serve me. Let me push through this barrier. And what you'll start to do is this gap will get closer and closer and closer to its actual performance, which, guess what, will lead to the thing that everybody is after, consistency. And which will equal profitability. That's it. That is what it will equal. And then once you land there, guess what? There will be no sunshine and rainbows. There will be nothing other than the fact that you have to do it again and again and again and again, which is why fluking it isn't worth it. You see some people's equity graphs go like this. I'm the fucking goat, brev, passed in one. And then they just blow up because they just over leverage themselves. Anyone can risk a risky trade. Bruno did it. If you haven't watched that video, by the way, it was a great video. My dog traded for me. But we're also going to do a round 2, I think, because my guy owes me money, innit? He better make it back. But he could hit a trade with 4% risk and he could win. Does it mean he's the best trader in the world? No, he was just okay with the risk. Some people have a massive pot of money they're willing to use to pass props, do them quickly, make money, go again, go again. The majority of people think they want that, but they don't. They want the consistency. And don't forget, right, if you can match your salary in trading, you are living in a phenomenal time of the world where arguably, if you're able to live and do everything you do from your salary, then in theory, everything you make from trading is purely for you to invest, to grow, and actually build wealth. And that's how you build wealth. The problem is skewed, where everyone wants to be a full-time trader. They think they want to make 20k every single month easily, piece of piss, not going to be a problem. And they haven't laid the correct foundations to do that. 20k a month in trading is fuck all. You can make 50, you can make 100. There's no freaking limiting beliefs around here. But what I'm saying is, you also could just match your salary and go from there and build and build and build. And sometimes people are trying to rush it. And that's online. People are forcing you to rush, be quick, do this, do that, fearmonger this. I'm selling you the course on this and the source on that and da. The reality of it is like, you've probably already got everything you need. You just need to focus on working on all the other things I've mentioned, which are, funny enough, with this, which most people don't want to work on, which I've spent 4 years talking about, not many people care about. And those of you that do, seeing success. Same within my Discord. Those that are working on it are seeing success. Those that choose not to are the ones that message going, it's not really for me, and leave. And then they just stay in the same place, hoping that one day they land on that massive push without realizing you've got to do the work. Performance gaps in everything that you do. Careers, sports, business, gym, everything. It's there. It's just not highlighted enough. It's not glamorized enough. But this is something I've spoken about a lot, and quite a few of you asked me to do a video on it, so I thought I would. I'm going for a walk in a bit. Yes, gang, it is Friday and I'm just outroing this video because I decided there's enough value in it and people probably didn't even get this far. If you did, let me know in the chat with performance gap or gap. You decide. But anyway, I just wanted to outro because I felt rude. Hope you all have a fantastic weekend and week ahead. Most people probably didn't get to the real gems. It's sad, but that's on them, not me. Peace and love, gang.